I think we'll probably get started and let people join as we go along. So let's start over here.
Sure. Good morning, everyone, and welcome to today's webinar on business recovery planning. My name is Mandy, and I'm one of the accountants at Panthera Accounting, and I'll be your moderator for today. So I'm sure a lot of you are familiar with Zoom already, but just to go through a few of the controls, we've got the audio settings where you can test your speakers and submit questions via the Q&A if you want to, which we'll answer at the end. If you need to leave at any time, just press the red leave meeting button. We've also placed, as Tory said, we've placed a link in the chat box, which contains the workbook. I'd like to introduce today's presenters. We've got Vikki Fielden, who's an assistant accountant at Panthera, and Tory Wagg, who's our director. Welcome, Vikki and Tory.
Thank you, Mandy.
Thanks, Mandy.
Sorry, I've just gone too far. Thank you, Mandy, and thank you to everyone who's taken time out of their busy schedules to join us this morning. I know that time is precious and that some of you will be juggling all sorts of hats at the moment, but we're confident that you and your business will really benefit from drawing up a recovery plan, and our aim today is to help you get started. So, our thought of the day, I think you'll all agree that we're navigating very rough seas at the moment, and this African proverb, smooth seas don't make skillful sailors, reiterates that. By now often heard phrase, we'll come out of this. But with a bit of work and planning, we can not only come out of this, but can emerge much stronger and much better prepared. Let's have a quick run through of the agenda. Firstly, we're going to look at closing the disconnect. Then we'll move on to the need to reinvent, your budget, personal and business, opportunities, vulnerabilities, and critical challenges, identifying and managing risks, goals and actions, pulling everything together, your next steps, our support, and finally questions. This webinar is being recorded and there is a workbook that you can download, as Tory's already mentioned, so there's no need to make copious notes, but please feel free to submit any questions by the Q&A panel as we go along, and we'll try to cover as many as possible at the end. Before we get stuck in though, I just want to throw in the usual disclaimer that we're also famous for in our industry, which is that we are not insolvency specialists here. There are very strict rules and regulations around solvency, some of which have been amended to account for the impacts of COVID-19. If your business is unable to continue to trade as a result of solvency or bank finance issues, however, we will of course refer you to suitably qualified specialists. So that's the small print out the way, we can get started. Closing the disconnect. Some of you are probably wondering what on earth we're talking about, but I just wanted to share some thoughts about how we can stay better connected at this time. And I'm not talking about how we can be better connected with technology, with things like these webinars and our online meetings, though these are important. I'm coming from the perspective of how we can work together more effectively now and in the future, where your expertise can be combined with ours to create outcomes that wouldn't be possible by working alone. In our view, it has never been more important to create and connect with a team of people who can help you at this time. People like your banker, your legal and HR advisors, your accountants, bookkeepers, so that together you can come up with a far better plan. At Panthera, our core purpose is to help businesses to thrive. Hence why we are running this webinar, which we hope will just be the beginning of how we can work even better together. As I said before, please don't be shy about asking questions when they come to mind. As I said, we'll cover as many as we can at the end. So, the need to innovate. During times of adversity, we are often forced to think outside the square, to reinvent the way we work or behave. We see four main opportunities for you to reinvent your business. The first opportunity is to innovate. The Oxford Dictionary defines innovation as the introduction of new things, ideas, or ways of doing something. A great example we've seen during the COVID-19 pandemic is a company that changed from selling travel pillows to hair clippers. In this sense, innovation is doing something completely different. An example for you might be introducing a new product line or service. The second way to reinvent is to re-engineer. The Cambridge Dictionary defines re-engineer as to change and improve the design of a product or system. In other words, use what you've already got to produce something completely different. One example of re-engineering is the Scottish beer company, Brewdog, looking at what they can make and moving from producing beer to creating their own hand sanitizer. Please note, however, this is not the same as a certain president asking if it is safe to drink disinfectant to cure coronavirus. Another example of re-engineering is the 7 Formula One teams who took up the NHS challenge to make ventilators. The third way to reinvent your business is to adapt or change the way you deliver products or services. Remember the biological definition of adaptation, which is the process by which a species becomes fitted to its environment. In other words, if we take the new normal or new environment that we find ourselves in, how can we change to suit that environment better? A great example is a beauty therapy business that emailed their client base offering a free online skin consultation if they buy a product. As well as new bundles of product, including full-size products and multiple samples, this was marketed as the home facial. That business was unable to offer beauty therapy in the traditional way during lockdown, so needed to adapt to an online solution. So we know we can reinvent in 4 ways. 1, innovation, 2, re-engineering, 3, adaptation, and now number 4, to widen your lane. What we mean by widening your lane is to broaden your product or service offering. For example, the cafe who broadens their offering from lunchtime sandwiches, cakes and coffee to include new ready-made meals, boxed sweet treats, to selling wholesale ingredients and even ingredient bundles with recipes for making their signature treats. So with these 4 ideas in mind, innovation, re-engineering, adaptation, or broadening your offering, what can you do in your business? This is what business recovery planning is all about, and this is where I'm going to hand over to Tory to run through what that process looks like. Thanks, Tory.
Thanks so much, Vikki. That's brilliant. So I'm going to take over from here and talk about some of this actual process that we're going to go through in the business recovery planning system that we've developed. So we always start with your personal budget, and that might seem like a slightly strange thing to suggest when we're talking about business planning. But as always, there's a natural order in which we look to reinvent our businesses. And with business continuity planning, and some of you may have come on that webinar that we did earlier in the month, and we asked you to put the oxygen mask on yourself first. Business recovery planning is no different to that. Remember that the business is there to serve you and not the other way around. So step 1, put your shareholder or your owner hat on and define what you need to get from your business. Can you make savings in your personal spending to reduce the cash flow strain on the business? No doubt you've made savings during lockdown. So one of the questions to ask yourself is, can these savings continue? Updating your personal budget is best done using a template, and I've uploaded a personal budget template to that Google Drive that we shared in the chat, where the workbook also is held, so you can download that straight away when we finish this webinar and start to really look at your personal budget. And if you use that template, you're going to make sure you don't miss any expenses. If that feels a little bit heavy lifting for you, but too much work to do, a really easy way to do this is just to simply look at your bank statements online and see what you typically spend in a month. Of course, you do need to be realistic too, as lockdown has been very different. The spending opportunities are so limited right now. We're not going out, we're not spending on dinners and holidays and things. So make sure you go back maybe 3 or 4 months and review your expenses from that period to really have a look and see where your spending has been going in the past. So once you've done your personal budget, you can build up your revised business budget. Many of you have already done a business budget for this year, and it's likely that that has changed significantly right now. I know in our business, I rewrote our budget just last week, knowing the sort of changes that we've got to build into that new budget. We recommend what we call a bottom-up process. So you start with the increase in cash that you want to achieve for the year, and then you work up from there. It's really important to start here. As many businesses that we've been speaking to, they found that they just didn't have a sufficient war chest of cash when they went into the lockdown. And we saw that with the sort of panic that came in around C-bills and the bounce back loans, how quickly people did need to get their hands on cash. And the sort of the good rule of thumb of having maybe 3 to 4 months of cash in the bank in order to cover your overheads, we found quite a lot of businesses just hadn't done that because we've not really been through a rough bit of economy for, I don't know, maybe 5 or 6 years. So we've got really comfortable in the fact that cash just kept on flowing into the business. And I think one of the learnings that we've had from lockdown is that that part of the sort of resilience of our businesses might have been missing. So this slide here isn't designed to be technical accountees. I will try really hard to stick to using terms that everybody would recognise in their day-to-day lives. We just want to show you how you can take control back by going through a high-level, step-by-step process here. So if we start with the increase or the decrease in cash that you're looking for, I'm assuming most people are going to be looking for an increased cash buffer, knowing that the future waters could be choppier than we've seen for a while. So having a larger buffer around us makes us feel more confident and comfortable. So the next step up is to look at other cash movements. So these are things like you may be able to free up some cash in your business by reducing your debtors, for example, collecting those people that owe you money, collecting that in more quickly, reducing your stock holdings. So if you've got a shop and you've got a lot of stock in the stock room, moving that on, not buying stock in such great quantities going forward, so that you've got a really streamlined holding of stock, and that helps to free up some cash. Maybe the same with work in progress, so getting things out of the door faster in a business like ours. That means getting accounts out of the door to clients at a quicker pace, or by negotiating better terms with your suppliers so that you've got longer before you need to pay them. So that would deal with your other cash movements. The next line up is the loan principal to be repaid. So you need to allow for however much that you've borrowed, making sure that you've got enough to make those repayments on existing and any new finance that you might have taken out. Don't forget that the bounce back loans, we've got no repayments for 12 months, so you don't need to factor that in. And it may be that there's a bit of space in your revised budget there to restructure some of your debts, so maybe using this cheaper bounce back loan borrowing to pay off a more expensive loan that you've got, and to stop you having to make any principal repayments over the next 12 months. The next line up is the asset purchases. So there may be new assets that you do need in order to do the work that you're doing now. That might be things like, for example, a change from desktop computers that were in the office to laptop computers that give you the flexibility to work from home. Or you may have obsolete assets that you can sell. So you may have something that's sitting around in your workshop that you really aren't going to use again. And it would be a really good way of freeing up the cash that you've got tied up in that asset. So after that, we look at our drawings. It's what you add into your personal budget from the previous slide. So you do your personal budget first to let you know what the drawings need to be from your business. Next step up is the net profit after tax. So adding or subtracting the items that we've already got below that point gives you the target profit after tax that you need to be making. Then we add in what the tax will be to get your required profit before the tax. And then you have a careful look at your overheads to see if there are any savings that can be made there. Once you've gone through all of that process, you'll have the gross profit that you need. Using your desired gross profit percentage, so that's working out how much the cost of sales, the cost of making or providing the thing that you sell onto your customers. When you know what that gross profit percentage is, you can then work out what the sales level is required to give you what you need from your business. And that's why we do this bottom to the top type of budgeting, because it starts from what you need and it works out what you're going to have to sell to get there. Then it's all about reviewing these numbers and margins to ensure you can come up with a workable revised budget. And it's a bit of pressure testing at that point, sense testing, to make sure that you haven't come up with some kind of crazy budget, or alternatively, you've not underplayed it and you're doing yourself short. Ideally, from here, you'll then complete a more detailed forecast on a month-by-month basis, so you have a basis from which to track your progress. And this is where we're having real-time, having that real-time digital reports and visibility of your numbers is really, really important. That's why we love Xero. We can have proper daily bookkeeping being kept in Xero, and means we've got all of those figures that we need right at our fingertips. So for example, if you've identified that your sales total for the year needs to be, let's say, £500,000, that equates to about £10,500 a week if your business is open for 48 weeks per year. You'll want to have a system for recording how you're going against that target. Likewise, if you've got debtor terms of 7 days, so you say to your customers, you can pay us within 7 days of our invoice being raised, and your debtors are currently taking 41 days, which is what you can see here in this slide, then you're going to have to measure how that number is improving over time to make sure that you're really keeping focused on it. We strongly recommend you measure no more than 5 of your most important numbers. And these are what we call key performance indicators, or KPIs. You might have heard that term being used a lot. Some examples are something like tracking your daily or your weekly sales, tracking your gross profit by product or service line, so you can see which products are more profitable than others. Tracking your debtor days, and you can see that in this example we've got on the slide. It's in your outstanding receivables, that sort of orangey box. And the increase or the decrease in cash for the month. And again, on this slide, you can see that bottom left on the cash on hand monitor. Some of you might recognize this slide we've got here. This is from Spotlight, which is the a reporting tool that we like to use at Panthera to pull data out of Xero and to put it into a pictorial report for you. It's much easier for you to take the information in on this basis, and it allows you to really focus on those KPIs, on the things that you need to be looking at in your business. Once you've got the KPIs in the budget, it's important to have these numbers loaded into your monthly reporting system so you can track your actual results to your budget and you can see how you're doing month on month. And we can help you with sorting out how to get that kind of information really easily. So do give us a shout if that's the sort of thing that you would like to do some work on. So once you know at a high level what your budget is, it's time to look at the opportunities that exist to achieve that budget. Again, we recommend focusing on no more than 5 key opportunities. So think of the idea we talked about earlier to reinvent your business. Opportunities could also be things like working in more of an online way with your team or your customers. You may no longer need the same premises, or you may need to redefine the roles in your business. There may be new lines of revenue to pursue, or other businesses that could be acquired at this time. Other opportunities might be around the adoption of technology or systems to improve your efficiency, maybe around online communication. Taking the time to brainstorm all of these opportunities to improve your business is a really valuable and empowering exercise. We've just done it here at Panthera. We always like to walk our talk. So we're talking about business recovery planning for you guys, but of course, I'm a small business owner too, and looking for these opportunities and using the team to help us brainstorm that is going to be a really important thing that's going to come out of the next couple of weeks. You really need to make sure you leave no stone unturned here. So if you can make sure that you can find some time for some creative thinking, step away from your desk, maybe get outside, find a place that you can really sort of open your mind up to what those opportunities are. I think you'll find it incredibly valuable. Of course, there's a flip side to this. The flip side of opportunity is your vulnerabilities. So what we're going to ask next is, what are the 5 biggest vulnerabilities in our businesses right now? They could be things like poor cash flow, a sustained downturn in demand for your current products or services, maybe poor debtor management or banking covenants that aren't being met. Naming the vulnerabilities enables you to make a plan to overcome them. Name so you can tame is a great mindset to have here. And this is a part where you don't want to pull back. You really want to be brutally honest in your assessment of those vulnerabilities. It's not always the most comfortable process to go through, but it's really, really important that you look at exactly what's going on across all the areas of your business to see where those vulnerabilities might be. A rosy plan for your financiers and the bank is not going to pass muster right now. And the banks are expecting to see those sorts of vulnerabilities being talked about. They want to know that you're taking your governance and your leadership really seriously. Once you've identified your 5 biggest opportunities and your 5 vulnerabilities, you need to then bring that down to identify your 2 to 3 most critical challenges. These might be things like deciding whether or not to sell or liquidate part of your business, or establishing an online sales platform, or securing sufficient finance to trade through the next 3 months. We strongly recommend that you do a careful analysis of all the risks in your business. And the best way to do this is to complete a risk register. And this assesses the likelihood of each risk and then the consequences for your business if that risk is not mitigated. You're going to find a copy of our risk register template in that Google Drive that we've uploaded for you, and you can work through that. It's going to take a little bit of time, and it's a slightly in-depth piece of work. I reckon, a few hours you might want to spend on doing that. If your business is really a lot more simple, it's just you in the business maybe, then you can actually just scale this right down and maybe just use a simple template to write these things out. But I think looking at the risks in your business is just such an important part of the recovery planning, and it'll stand you in really good stead for if something like this happens, if or when something like this happens again. If we go into a second peak, for example, you can just pull out that risk register and you're going to be really ready to go. So risks fall into the following 10 categories. The first one is governance. So risks here include poor planning, lack of up-to-date policies, maybe poor discipline around working on the business because you're so busy on working at delivery. And I think right now in the last couple of months, I've seen certain business owners really get caught up in this, where they feel they've got to keep on delivering, so they're not stepping back and making sure that their business is being carefully run and writing their policies and things like that. The next area is leadership. So there are some risks here around communication, which is trickier when we can't see each other face to face. Reporting, team morale, those kind of things that maybe have been put under stress because we're not all in one place together. Products and services, so these risks would be around lack of adaptation or innovation to the new environment we find ourselves in. We've got some operational risks, that's around suppliers, your supply chain, having the right contracts and terms and conditions in place, and key customers. For example, if one of your key customers is really struggling through this period, then that's going to have an impact on the resilience in your business, especially if you've got an out of balance reliance on certain big customers within your customer base. Marketing risks, these could be things like having a poor return on investment, maybe overspending on certain suppliers, or alternatively not putting enough emphasis onto marketing and going quiet. We've seen other accountants in our industry sort of shutting the curtains and disappearing from social media, and that sort of risk in your marketing is going to have some follow-on. The next one is sales. So the need to adapt to e-commerce, online selling maybe, risks around poor training or overselling during these difficult times. So finance risks is our next area. This is definitely where I would put all of my focus, but of course it's nice to put it into all of these 10 areas. But of course with finance, it's going to be things like undercapitalization, not having enough cash in the bank, the cash flow starting to dry up, poor financing structures, so expensive borrowing, maybe poor credit control, and not having good debtor management, not having those conversations, difficult conversations perhaps with your customers about how they're going to pay you, and then poor reporting, lack of forecasting, not being able to see what's coming up in the future. HR risks, so perhaps overspending on your staff base, having poorly managed restructuring going on, perhaps not having enough of a plan in place for redundancies that are going to happen, and that sort of thing can lead to grievances and tribunals, incredibly expensive. And for those of you that have been joining me on our Friday call with Caroline Varlan over at Gap HR, we've been talking a lot about the risks involved in restructuring and how to mitigate those. So admin risks, this might sound like a strange one to some of you, but there are definitely risks in having a lack of automation in your administration. You might find a little bit like we did, one of the things that was a risk in our business is that we had paper files. We're in the process of going paperless. Gosh, we're nearly there. It's been a big journey. But things like having paper files in an office that you're no longer being able to visit, that's a risk in your business. So how do you mitigate that? And lastly, we've got technology. So poor adaptation of software, using the wrong applications, having some out-of-date technology, or perhaps just not having all of the passwords and the logins that you need all to your fingertips. So there are some risks involved around there as well. So once you've identified the risks, you need to pull everything together into a cohesive plan with goals, actions, and responsibilities. Your business recovery plan is much more detailed than your business plan. And if you've done a business plan with us, you know, we bring it down to just being a single page, and then we revisit it on a quarterly basis. And it's great because it's very easy to see in a single place. But the business recovery plan is getting right down into the details for each department of the business. So it's more detailed than these standard business plans that we tend to make with clients, but it's really strong because of the detail in it. Goals need to be SMART, and all actions need to be assigned to someone responsible. These goals and actions need to be updated regularly through some form of regular review process. There's no point in writing these recovery plans and then putting them in your desk drawer and not looking at them again. At this time, we recommend something like a monthly review for at least 6 months, and then moving over probably to something like a quarterly review after that, to make sure that those goals and the actions that we put into the recovery plan do actually happen. It's that accountability part that's so important in planning. The upfront time spent on planning is what we see, but really the way that a plan turns into some solid actions is by the accountability that happens afterwards. So let's take a closer look at how to pull all of what we've just discussed together now as a complete package. Depending on your circumstances, on the size of your business, the number of employees you've got, maybe if you've got departments, these are going to be slightly different. In a complete package, it should have your personal budget, your risk register, your business recovery plan, a business forecast, an updated organisation chart if you've got a team of people. And in fact, we might even suggest that if it's just 1 or 2 of you in the business, we really like to use that org chart to make sure that everybody knows whose role is being covered where. And if you're applying for finance, you'd also want to have a finance application in there as well. You may not need to do all of this work at the same time. For example, you might have sufficient cash flow now, so you don't need to apply for finance. Likewise, if you don't have a team, you may not need to have the updated organisation chart. What's important is that you establish what is right for you and your business. What combination of these do you need, and who will do them? And I think if you've got your workbook and you've got your notes out now, this is a really good time just to jot down some thoughts about what is it that's important for you in your business from that list, and who's going to do them. So here's an example of what this business recovery plan would look like. So when we're writing a business recovery plan, in fact, the executive summary, which is the bit you can see on your screen right now, is the bit that we do at the end. So we'll start with sort of blocking out an idea of an executive summary, then we'll work through the rest of the areas in your business plan, business recovery plan, and then at the end we'll come back and we'll write up this executive summary. So this example plan that we've got here has been written for Buzz Electrical Contracting Limited. It's an electrical company that has 2 different divisions. So it does domestic electrical work, and it also goes out into the commercial world and does work there as well. And what's happened in this business is that there's been a real downturn in the domestic side. Obviously nobody could get electricians into their homes and still aren't able to at the moment, although we're starting to get to an idea of when that might change. But they have been able to do commercial work because the offices they've been working in have been empty, so they've been able to get in and do some of that sort of work. This business got some cash flow problems because the domestic customers haven't been able to pay them on time. And then they've also got the added implication that they've got some staff on the domestic side who have been furloughed. So they're on full or 80% of their wages, depending on who they are. And that's all been paid out for the last 6 weeks. And we've just now started to get the furlough money coming back into the business. So we'd write this executive summary, and then the next part that we would put into the plan is what do the business owners need for their monthly personal spending now, and what would they like to do in the next 3 years. So that's from that personal budget that we looked at right at the beginning of this webinar, and that's where these figures get put into the plan. So then we look at what the annual spending is going to be, what the roles are that the owner is going to be having. So in this particular plan, we've said at the moment they're the general manager and operations leader, and what they want to do within 3 years is just to move up to being a general manager. We look at the sort of hours that you as the business owner want to be working, what it's going to look like for the next year. So this particular owner, she just wants to do 45 hours a week. That's a pretty busy old week for 48 weeks, and she knows she's going to have to put that time in as the ops leader, but in 3 years time wants to drop that down to 40 hours a week and have an extra couple of weeks of holiday. So we put that into the plan right at the beginning so that we know how we're going to get there through what we change in the business. So the next part is looking at the new finance that's needed, and this particular business is saying, well, possibly what we'll do is we'll acquire another electrical business. This one's called Strongman Engineering. And if we need to do that, then we need to get a loan. We're going to ask for an overdraft extension to cover working capital. We're going to get some new finance, and we're going to use the security that's already in there. And all of this information will come out of the work that we do on looking at setting up that budget and then working out into a 12-month forecast. So the next part is bringing those details from the budget that we've already talked about and putting those into this plan. So we'll look at it on an annual basis, and then over time we'd split that out into quarters. Coming down below that budget, so this is the budget that we talked about, starting from the bottom and working upwards. This is working exactly the same way. So what's the net profit that we need to make in order to cover the cash that we're going to want to have in the bank? So in this particular plan, we've said we want to have £10,000 more cash available in the bank. How do we get there? Well, we make these changes to the other cash movements. That's reducing our debtor days, taking a little bit longer to pay for stock, for example, or bringing down the stock holding, borrowing some cash, so £25,000 coming in, selling off some assets, and making sure we've got enough money for some drawings in there. The next section we look at are those critical KPIs that we talked about. So what are we going to measure to make sure that we hit our plan? And for this business, it's going to be decreasing your debtor days, decreasing your stock days, increasing your gross profit margin, making sure that you've got a minimum weekly sales target. For this business, £15,000 a month needs £15,000 a week is what their sales target is. So making sure that's shared out with the staff, everybody knows and working to the same plan, and then putting in these board meetings that are going to be held monthly. So that covers out some of those governance risks that we talked about. Then we're looking at those opportunities. So this can be sometimes a little bit of a tricky thing to look at if you're sort of feeling a little bit down in lockdown. You know, sort of what tends to happen is when people get a bit scared, the blinkers come on, they retreat a little bit from the opportunities. So this again is where I talked about getting outside, using the creative part of your brain, really engaging with some brainstorming. If you don't have someone in your business to do that with, it's exactly the sort of things that we're here for. So me, Vikki, Mandy, the team is here to help you with that sort of creative part of the brainstorming part of planning. And those opportunities for this business, so they're going to look at growing their industrial side of the business, restructuring their residential, the domestic division, looking at costs, reviewing those, considering buying another business, and improving the financial systems and the technology around that. Then we move down into the vulnerabilities area. So where are we vulnerable here? Cash flow. Do we need to increase our overdraft limit? What are going to be the losses over on that domestic side? Do we need to close it down? Well, we've got some weaknesses in our admin and our finance. We haven't got very good planning, so we need to put some regular structured meetings in place. We've got low morale. Half the team have worked really hard, while the other half have been on holiday receiving 80% of their pay. I expect to see that vulnerability turning up in a number of organisations where you've got part of your team furloughed and part of them not. And it's definitely a vulnerability that needs to be mitigated. So out of all of that, we pull out what those most critical challenges are, deciding what to do about this residential division, about the domestic division. That's a big challenge for this business. And then fixing the cash flow so the business can trade through the next 3 months comfortably. So you can see how that's really pulled down to some critical things to focus on for the next 3-6 months. And it's helped the business to concentrate on exactly where it needs to put its time and effort right now. So what we'll quickly just run through here is how that plan looks based on those 10 different areas of the business that we talked about in the risk plan. So what we'll do here is we'll have the different departments, we'll say what the risks are within those different departments, then we'll add some annual goals in. And after we put the annual goals in, we'll break those down into 90-day goals. So if just, for example, we take this leadership area, we need to improve our internal reporting to the team, there's a risk there. So the goal is team aware of the overall business goals and achieving their KPIs. How do we break that down into a 90-day goal? We'll put some monthly internal reporting establishments into that goal. It's one thing having a goal, it's another thing having the actions around making that goal happen. So we make sure we put those actions in. So here we'll arrange a team meeting to discuss the contents of this plan, apart from the decision to close the residential division, which is obviously a really sensitive area. There are HR implications for talking about that within the team until you're ready to do it. So making sure that there's an action around sharing, but not oversharing. And then arranging team-wide measurements and reporting of the KPIs. Alongside those actions, we say who's going to do it. So in this one, we've got Jessie, who's the owner of the KPIs. So that would be somebody in the finance function, and then the whole company. So Buzz's board is going to do the team meeting, and we also always put in when are we going to get these things done. There's no point in having these actions set out without knowing who and when these are going to happen, otherwise they're just going to run on and that the plan doesn't get put into practice. So you can see we've got governance, leadership, product development and HR, and then marketing, sales, ops, finance and admin. And because it's where my mind lies, I'll just pull out these finance ones. So as an example of what the risks are in the finance area, there isn't sufficient cash flow to trade through the next 3 months. So what's the annual goal going to be? To have free cash flow of at least £50,000 available at all times. That's this war chest that we've discussed. And that gives us a lot of comfort as business owners to know that we can trade through tricky periods again. What's the 90-day goal around that? Well, it would be to have at least £25,000 of available cash flow in the first 90 days, and then we can add the next 25,000 in the next 90 days. What are the actions to get there? We'd engage an outsourced credit manager, establish regular reporting of debtor days, and arrange a short-term overdraft extension. We know who's going to do that, we know when it needs to be done by, and then we've got some actions to take away and really work on. So there's an idea of what this plan is all about. I really hope I haven't overwhelmed you with too much technical detail here. I just really wanted to get as much information out to you guys as possible so that you can see how detailed this business recovery plan is and how useful it would be for you to have in your business. My goal has been to share with you what business recovery planning is all about and how to do it. So what are your next steps from here? Firstly, I think it's really important to know that doing nothing is not an option right now. We're entering into a period of business not in any way as normal. The environment that we're working in is different, changing, and it's not something that we've really seen before. Doing what you've always done in the past is really unlikely to give you the same results as you've managed to have in the past. So we need to look at how we do things differently. Remember to put your oxygen mask on yourself first. The more sustainable you can make your business right now, the better it is for everyone. And I mean that in a sort of holistic way. So it's better for your family. It's better for the people that you spend time with, your friends. If you're not carrying an awful lot of stress around on your shoulders, it's also much better for your staff. So the people that you work with need to know that you've got a plan and you know where you're going. It's going to give them a lot of comfort. It's also much better for your customers and for your suppliers to know that your business is sustainable and it's going to be there in the long run. You need to make a plan. You need to have a plan to get through these times. You need to know how, if this happens again, you're going to get through it better. And you really need to know where you're heading. You need to focus on what you can do as opposed to worrying about what might happen in the future. If you tend towards anxiety, it's definitely one of my little bugbears. The worrying right now can really suck away the energy to get started on a plan. But what I do definitely find is if I've got a plan in front of me that I can return to when I'm starting to feel anxious or starting to worry, it really helps me to calm down, helps me to then put forward a calm persona to the people that I'm dealing with. and it helps me to make sure that I feel like I'm making progress. And one of the things about worrying an awful lot is that you can feel like you're just on a hamster wheel and you're never getting anywhere. So making a plan can really help with that. We're here for you. We want you to know that we're here to help you. You know, as Vikki talked about, our core value right at the beginning of this webinar, we're here to help our customers to thrive, and the helping part is really important to us. It's where we get all of our joy from, making sure that the businesses that we work with come out of whatever environment they're in a strong position. So shout out for whatever help that you need from us. So this is how we can help you. Our recommended strategy is to complete this business recovery plan. I can't imagine why you wouldn't do it. Having started the process myself in the business, I'm really amazed at the value that we're getting from it already. We've got some really great feedback about our planning sessions. We've been doing business plans, we've been doing business continuity plans, and now this business recovery plan is the one that we're really focusing on with clients. It's the most applicable to the situation we find ourselves in right now. So if you haven't yet done your business recovery plan, now is the time to do it. It's going to form a great foundation from which to build your cash flow improvement strategy and to get yourself running again. It's also going to help if you need to make finance applications. This sort of plan, if you can provide it to the bank, will make a massive difference to the way that they look at your application. It's going to show that you really have thought about all of the risks and the opportunities in your business. So here are some options that you can use to complete the plan. So our first one, the online business recovery planning session with us. So this is where you meet with us online, and we can do this all together. We either do one session of up to 4 hours, or if that sounds too intense, and for some people that is too long to be spending just on one thing, we can split up into two 2-hour sessions. We send you in-depth pre-work, and I'll really stress that it is in-depth pre-work to complete. It allows you to have time to consider the impact that COVID-19's had on each department of your business. And it's going to ask you some quite soul-searching questions, some of them actually. So what I've done with my pre-work is I sat down and I did chunks of it at a time, really concentrated on 2 or 3 areas of the business, went away, thought about it and came back to it again. But it's been an incredibly valuable process to go through. By doing that pre-work, it ensures you've got a detailed and well thought out plan to give your business the best chance of recovery. And what we've done with our pricing on this, just so that you can see that on the slide, we've taken our usual business planning session charges, £895, and we've halved that. We know that cash flow is tricky for some clients, and we really want to get this out to as many people as possible. So this is really at cost for us, but we know how important it is to have a good plan. So that's why we've slashed these prices. It's not in our nature to discount normally, but right now it feels like the right thing to do. The second option is to meet with us online for the business recovery planning session, and then also work with you to prepare an updated cash flow forecast, a 3-way forecast, which is doing your profit and loss, your balance sheet, and your cash flow forecast. We take that out over maybe 2 or even 3 years, and also to help you with the finance application. We've done this with one of our clients just recently, and the feedback from the bank was that they hadn't seen such well-prepared documentation before. They were really impressed, and it helped their CBILS application go through much more easily. The third option is a complimentary business recovery review. We've made sure there is this free option for our clients that have maybe a slightly simpler business and they don't feel that they need the full business recovery plan. So what we do here is we'll send you a business recovery action list. You complete that yourself, and it's a condensed version of the plan. So rather than the more intricate parts where you need to go down into a lot of detail, this one's suited to those of you who've got maybe a smaller business, less staff perhaps, and you just don't require a comprehensive business recovery plan, but you still want to make this plan for your business. Once you've completed it, you send the action plan back to us, and then we schedule a free 15-minute call. We review your plan with you and we give you some next steps. And I mean, this is a really good option if you're not needing to go right into depth, or you're just wanting a slightly lighter touch, but you still want the plan. I guess the risk that there is with this is that, and we've seen this a few times where we offer out these free templates for people to use, is that you get started and you never quite finish it because there's no time pressure on you to get around to doing that work. So I definitely think you should contemplate this, but be aware if you tend to be a procrastinator and you need somebody to sort of help you through this process, then the online business recovery planning session with our input might be a better one for you. And then fourthly, if you're just not sure on what the best way forward is, you're not quite sure you want to do the business recovery review or the plan, you could just have a complimentary meeting with us to discuss your goals, look at your current problems and your challenges, and then we can agree the best way that we can support you. And we do this absolutely free. They're 15 to 20 minutes. It's there for customers who are already with us. We've clients that we've already got on board, but it's also available to those of you who maybe have another accountant who isn't reaching out to you, or you don't have an accountant at all, or just feeling really unsupported in your business. We're so happy to talk to anybody about this. We're just, I hope it comes across, I'm just really excited about what this business planning can do for your business, and I want to get it out to as many people as possible. So if you're going to need to obtain business funding, we believe it's absolutely vital that you prepare a cash flow forecast. And I'll add a caveat to that. It's not just if you're going to go for business funding, it's if you've already got it. So if you've already taken a bounce back loan, and we know that those were really quite easy for most people to get hold of, but you haven't got a plan in place about how you're going to use that in your recovery, I'm so adamant that you must have a cash flow plan for that. I'm worried that we're going to see businesses who have taken that cash and popped it into their current account, and in 3 months' time it's just going to have whittled away through their fingers because they didn't have a plan on how to spend it. And in 9 months later, they're going to have to start repaying that money, and they don't know where it's going to come from. So that loan has got to be repaid. Your business needs to generate enough profit to convert into cash to make those repayments. And I really want to make sure that you're focused on the fact that that stuff is coming. And I don't want to be having conversations March 2021 where people start throwing up their hands and going, oh, I'd forgotten I had to pay my VAT that I put off, my PAYE that I put off, my tax bill that I put off, and now I've also got to make loan repayments. That is a place that I don't want any small business owner to find themselves in. Make a plan now, we won't get there. We know it may be difficult to commit to spending money right now. We've also got some different payment options available. So please don't let cost be a barrier to calling out and asking for some help. Get in touch, we can work together to come to some kind of arrangement that suits both of us. We really want to make sure that you get some help. We know that the benefits you get from these services will be far greater than our fee. Most importantly, it's about helping you as quickly as possible and ensuring we're working with you to build a stronger and more resilient business. So I'm just going to switch over and let Mandy pick up from here. I'm hoping that Mandy, hi there Mandy, fantastic.
Hello, hi.
She's going to just have a quick look through what we've got in the Q&As and share with us those questions, and Vikki and I, between us, will do our best to answer them.
Yeah, so we haven't actually had any questions for the live Q&A session yet, but feel free to put them in if you do have any. So a couple of questions we had before. Someone said, I love the idea of a business recovery plan, but I'm flat out with work right now. How do I free up the capacity to do this work?
Okay, so I'll probably pick that one up. So we often refer to the achiever matrix. It's got 4 quadrants, and you start with what is not urgent and not important. That's the quadrant of waste. So you know those kind of tasks that you find yourself on that are sort of filling in the time, but actually if you look at them, they're not moving your business on at all. Then we get really disciplined about putting time into what's important but not urgent, as this will save you time in the future. So these kind of tasks, things that are important but not urgent, they're often things like creating better processes, writing up a set of KPIs. So they are really important for your business, but they may not make it up into your urgent area. So getting that discipline around focusing on that so that you can save time in the future is really important. I appreciate it's really hard to do this when you've got urgent and important work to deal with just on your plate right now. I feel that it's month end right now. So in accounting, the next few days are all urgent and important. But if we can help you just to step back a little bit, that's where we really want to help you. So that's why we've created these resources, to give you that space to step back from the business and focus on the non-urgent but really important stuff. Does that answer the question, Mandy?
Yes, I think it does. Perfect, thank you. So another question we had is, I'm concerned I can't afford to do this work. What can you suggest?
Vikki, do you want to pick that one up, or should I do that?
Yeah, if you can do that, that'd be great.
Yeah, that's fine, no problem. So yes, we are always open to talking about options. I think the real question is, well, the real answer is that you can't afford not to do this work. There are some ways that you can do it without having to spend any cash. It's going to take a little bit of time, and that's using the action list. So just hit us up, pop something into the notes, send us an email. We can get that action list out to you, and you can do that for a complimentary action list, and you'll get that 15-minute call afterwards to discuss those challenges. That's definitely an option for you. If you know that you need the full business recovery plan, but you're a bit worried about how to do that fee, we could split it over 2 months. We could roll it up into a fee that we do over the 12 months. When you're working with us as a client, we do a monthly fee, not a year-end fee. So we could talk about how we could stretch that out. I'm really, really keen to make sure that you can access what you need. So there are some options again for you. Don't forget that there are things that doing the business recovery plan will help you to unlock. So for example, if we can squeeze down your debtor days so you get paid more quickly, you get more cash in the business, we could, for many businesses, we could get the cash to pay for something like your recovery planning just from doing that bit of work with you. So don't forget, there will be cash that gets freed up by going through this recovery planning system anyway. So that there are a few options for you there.
Perfect, thank you. We just had another question through as well from David Southgate.
Yeah.
So he said, I found in our business during lockdown, like yourselves, I've given out a lot of free advice about recruitment, CV writing, and general redundancy consultation.
Yeah.
I'm now having to convert back to paying for these services from June the 1st. Any tips, as people expect my advice to be free?
It's a great question, David. Yeah, absolutely. So one of the things that we've found helpful is to position that a little bit beforehand. Now, I know this is coming up for next month. I think it's genuinely, I think the answer is to have a really human conversation with the people that you're dealing with. So I think there's nothing wrong with saying to people, so here's the thing, the last 2 months I have worked X number of hours without charging you, and that's because I really care about your business and I wanted to come out the other side in the best shape it can be, but that's not sustainable for me. And the problem for you is if I don't have a sustainable business, I'm going to disappear and you need me as a supplier. That might sound a bit cutthroat. That's not quite how I meant it to come across. A little bit more like we're all in this together, and I'm here running a business. And I think when you're dealing with other businesses, definitely in the SME world and the smaller business community, those conversations are expected. We all know how this feels. A lot of us have been giving away a lot of free content to support one another because we understand that as a business community, we all come out of this faster if we all survive. So there's a lot of knowledge in our community that that's how it's going to work. They're expecting the conversation. One thing that I often will do before I know I've got one of those more awkward conversations coming up is to just sit down and say, I'm actually doing my client a favor here by having this conversation up front. They're worrying about it. They know they're not paying for something. They know it's coming at some stage. It can be a bit awkward. It's much nicer just to get that out on the table and say, okay, guys, let's talk about this fee situation. There's a lot of value in what I do. This is the value that I'm offering you. This is what the price needs to be. Let's talk about it. And then once you've had that open conversation, if it's a cash flow issue, if there's other stuff that's going on, it's again articulating how what you do is going to help them to get to a cash positive position. So for example, David, you're in recruitment, how getting that person into their business is going to allow them to start to generate more cash, free up more cash. How managing those people well is going to improve the performance on their KPIs, and therefore there's more cash in the business. So it's linking what you do as a service to their ROI, their return on investment, and making sure that's really clearly articulated. I hope that's helped.
Perfect, thank you. Yeah, so that's all the questions we've had through, but if anyone does have any other questions, feel free to email us or give us a call and we'll be happy to help.
Fantastic, thank you. I just want to say thank you to people for taking up their time today. I know that we've got a lot of webinars are out there in the world right now, and some of us are feeling kind of bombarded by the amount of digital education that we're being offered. It's incredible. We're so lucky that there are people out there sharing their knowledge. but I really appreciate that you've chosen to take time today to come and see this particular webinar. We'll make sure that it's available for you to watch again if you've missed any of it, and we'll get that recording up in the next day, I'll say. I might just want to edit it down and tidy it up a little bit. So really appreciate how valuable your time is. Thank you for coming. We hope we've given you plenty of ideas to think about, some clear options for how we can support you. Before we go, I thought I'd share this quote with you. Things may never go back to normal. You need to create a new normal, and that's okay. I really like the "that's okay" at the end of this one. I think getting okay with our new normal, I think it could be quite an exciting time ahead for us. So making sure that you create the new normal around you is going to be part of the next 3 to 6 months for us. Make a simple plan today. If I can get you to do one thing, it would be to commit to taking some, let's say 3 actions as a result of what you've heard here today. And if you can get those written down right now, that would be amazing. Get them written down, give each of them an owner, and put a completion date on it. I know this can be a worrying time for many businesses. I know that some businesses are suffering more than others, but you really don't need to worry alone. There is so much support out here, out in the world, and from us, and we've got lots more to come. We really are here to support you, so please reach out. So thanks for attending. Don't forget to complete the feedback when you're leaving the webinar. So if you just drop down into the poll, you'll find that we've got an exit poll there. A quick bit of feedback. It really helps us to make sure that the webinars that we're providing to our clients and to people in the business community are hitting all the right buttons for you. If you've got other feedback, so that poll just gives you some things that you can just click off, some pre-written answers. But if you've got more feedback you want to give to us, always feel free to drop us an email, pip@pantheraaccounting.co.uk, or come and find me on LinkedIn or Vikki and Mandy. They'd be really happy to chat with you on one of the social media sites. You'll find me on Twitter, you'll find us in the Facebook group, and we'd really like to continue this discussion about recovery planning out in the wider social media world. So please come and have a chat with us. Thank you so much for joining us. Thank you, Mandy. Thank you, Vikki, for helping me to host and to run the session. And I really look forward to seeing you at our next webinar.